Now let's turn our attention to Kenya. For weeks after legislators approved a law capping retail lending rates, the Kenya Bankers Association is very strident, even on this particular set, warning that price controls of this sort will restrict lending. August data from the central bank, which indicated the private sector credit growth had fallen to under 6% annual growth, that's more than a 4-year low, seemed to bolster their point. But if data from ICSI Bank, the largest in the region by bank accounts, is anything to go by, those claims were way off the mark as lending has rebounded strongly from mid-September.
And prices have gone down. I think the market had been misconstrued that the demand was inelastic, irrespective of price. I think we have realized that somehow maybe the pricing hadn't been pitched at the right place. Given the context of the country. There was huge debate, as was rightly put up in a public arena. Here is a middle income country with middle income status, middle income segment growing rapidly, but with interest rates of least developing country.
Yeah, 20% plus. I mean, that's pretty high.
I think there was also a logical question and a fair question, stability in macroeconomic environment. We saw monetary policy was working, then why the disconnect with the pricing? Inflation had stabilized, exchange rate had stabilized. Yes, interest rates had stabilized, but they had stabilized too high from where inflation was.
So ever since September 14th, onwards, what sort of numbers are we looking at? How much volume are we looking at in terms of loan applications, not just through Equitel, but also through, your brick and mortar applications, so to speak?
I think on a month-to-month basis, we have seen an upsurge that has increased our throughput by almost 50%. It is true, historically, Equity has been growing its loan book by 25%. But earlier this year, we had seen this decline all the way down to 2%. But suddenly, we have now seen the whole annualized rate has been pulled up to nearly 4%. So for us to have compensated, doubled that growth rate within 2 months, it shows that the volume is growing at approximately 50%.
50% month on month or 50% year on year?
Month on month.
Well, that's still pretty big.
It's doubled the year on year from 2 to 4.
So what about the volume, the size of each individual loan? Because, I mean, when you talk about mobile lending, more often than not, the volumes tend to be relatively tiny, 50,000 shillings, 100,000, 5,000 here, 2,000 there. What's the size of the loan that we're looking at now? Essentially for us, we didn't develop a mobile product. We used the mobile as a channel of rolling out our usual loans. So essentially, we took all the consumer loans and secured with a capping of 3 million shillings. So we see the average for the loan being 22,000 shillings for those who wants to use monthly repayment, averaging 3 months. And for those who are taking installment or single installment loans with an average of 8,000. So essentially we are seeing these, for the ones that are borrowing up to 12 months, we're seeing an average of 300,000. So essentially it is tipped and structured based on the usual ability to pay, other than based on a product. Might we get to a point 5 years from now where Equity is essentially more of a digital banking institution as opposed to actually having brick and mortar branches pretty much everywhere? I think the observation I've made is laser sharp to the point. We have seen in just 1 year of launching Equitel, we've been able to disburse 30 billion shillings, which essentially is more than what all the mobile products have been able to disburse for the entire existence. So essentially, the uptake is fairly significant. And it's simply because, as we said, we took digitization through mobile as a channel other than a product and allow customers to consume products that they were used to consume. So it is principally replacing
what used to be computerized systems with the digital systems to give the, our customers the desired experience that supports their lifestyle.